Hey guys, welcome back to Ryan Makes Sense. In today's episode, we are going to be looking at dividend stocks that could and may move like small cap growth stocks. Now, if you're not aware, dividend stocks do pay you a dividend. This could be annually, monthly, quarterly, but they are income stocks. So you put your money in there and then they give you a percentage each period, whatever that period is for that stock. So a quick example, let's say Starbucks is $100. Their dividend yield is 2%. So every year, if you put $100 into Starbucks, you're going to buy one share and you're going to get back $2. So might not sound like a lot, but compounding and reinvesting your dividend will go a long way in the long run. So with that said, we're going to look at a handful of stocks that are dividend paying stocks over 2% and are going to, or they could be moving like small cap companies. So potential for a lot of growth for these companies. I'll show you my parameters I put into FinViz to find these. Let's go ahead and get started. All right, guys, we are on finviz.com. Amazing website. Highly recommend you use it on your computer, laptop, desktop. Hard to use on your cell phone. So we are on the screener page. If you just go ahead and navigate to the screener, select all, and then you can see all these data points. So I want a dividend paying stock. So the first thing I'm going to do is I'm going to go over to dividend yield over here. I want to put over 2%. If I put over 5, 10, 15, 20%, these are unrealistic. And if you're ever promoting a company or exchange or a crypto exchange that offers over a 5% yield, such as FTX offering 8% yield, it sounds too good to be true, and it might be. So we're doing over 2% yield. We are looking at, we want it to be a small cap growth stock like esque company. So we want the gross margins right here to be over 30%. This is going to give us our high growth companies. And over on the bottom right hand corner, we have the float. The shares float is going to be under 100 million. So the supply is not going to be too big. And if these stocks do enter a technical setup, or maybe they have really good earnings and demand for these shares increases at a rapid pace, it could make the stock price go up. Again, but you only want to pick solid companies. We're going to be going through some, so don't worry, I got you covered here. We want companies that have positive sales growth over the last 5 years. So I went over and I changed this, right? You guys can see it right here. And then I want stocks that are above the 200 SMA right here, but below the 50 and the 20. That means they are, they're technically healthy, but they're kind of bouncing around. They might be coming to a resistance or maybe a support. We'll just look at a high level, and then if we find anything worth adding to our cart to check into later, we can chart that out and figure that out together. So I have all of these, and I'm going to actually, oh, I can't save it because I'm not logged in, unfortunately. I'm just going to take a quick screenshot of this so I can save it and then have something to save for my screener for the future. Okay. All right. Now that we've done that, let's, I think we're good to go because I already filtered it. So there's 19 stocks. Let's go ahead and look at 10 at a time. I mean, not look at 10 at a time, but let's just open 5 at a time. How about that? So we've opened Allison Transmission Holdings. We've got Ardmore Shipping Corporation, Cogent Communications, Compania, Cervecerias, Unidas, and Energizer. All right, so this first one we got is ticker symbol ALSN. Number one, does it make more sales than income? Yes, it does. It's got a PE of 7.79, meaning it is undervalued. Future state of the stock price is also undervalued here. Let's run the numbers on this. So we're going to do sales plus income plus market cap divided by shares float. And there's a ton of debt here. Let's see how much debt there is. So assets 4.6 billion, liabilities 3.7 billion. That's a little dangerous. And they make 2.7 billion, so they could pay their debt off. And looking at their debt to equity to long-term debt, they are paying it off according to this, but it is a little risky. So let's just go ahead and do some math here. So we're going to convert the market cap into a dollar percentage, or sorry, a dollar amount. So we're going to take 4,120,000,000. Is that right? 4,120,000,000. Yep. And we're going to divide it by 100 million. And we're going to put this number off to the side. So we have, no, that's not right. Wait, that could be right. Was that $41? That should have been $41. Yeah, okay, so we're going to put $41 off to the side. The stock is only trading at 43 already, so based off of that, we're in a really good position. But let's go ahead and do the sales. So 277 billion. Yep, 2.7 billion plus 531 million in income. All right, so that's 3.3 billion, and we're going to divide this by 91,720,000. This is the shares float. We get a stock price of $35. So $35 plus the 41.2, $77. Which is not bad. But we are also discounting all that debt that they have. So if we took that $41 share price and we removed the billions here, so 2.5 billion. So it would be 4.12 minus 2.50. Yeah. So this would be a $16 stock plus the 35. So this, 16 plus 35. So it's about a $51 stock in my opinion. That doesn't seem too far-fetched. It looked like Credit Suisse had this at $48. RIP Credit Suisse. Too soon. So this one on paper does not look bad. I don't like that much amount of debt. I mean, it's doing well. So we'll have this one on the back burner. ASC shipping. Shipping companies I'm a little bit weary of. We have to really look at them. Wow, it just hit an all-time high and it's coming back down. Wow, crazy. So this looks definitely overvalued. So 445.7 million plus 135 million, 135.1. All right, divided by 36.92. So the share price should be around $15 and it's at $14. So this is actually priced reasonably. I don't see much upside here. I only see downside. Literally, this candle is going down. So not that great. Huge net income positive. Cash is going down, which is okay. Total assets 723 million. Total liabilities 217 million. Good ratio there. Not a bad company, but gross margins. I mean, this company has just done really well. It says institutions own 67%. Fintel. And we're going to look at ASC. 74%. So institutions have been adding this one. This one's hard not to like. Look at this. Look at this increase in volume. This one's hard not to like. We're going to have to keep it. Okay, moving on to the next one. CCOI, Cogent Communications. Okay, so, wow. Okay, just looking at the chart. It's basically been running up and now it's in a downtrend. You see right here, long run up, and now ever since 2020, it's just kind of been working its way down. So we're in a long-term downtrend. Let's just run some numbers really quick. It is over the market cap is over 1 billion, so we're going to include that in the share price. So let's just do sales income really quick. 599 million 0.6 plus 5.5 million. So 605 million. Looks like let's see their cash and their debt. They have 223 in cash, 223 million cash. Total debt 1.2 billion. So let's add this up really quick. So let's add the cash of 223 plus 223.78. And let's include the market cap here of 2.9 billion because we're going to remove the debt. So we're going to add plus 290. So, oh, I hit the wrong button. So 828.88. 828.88 plus 2.9 billion. Here we go. Okay, so that's right. No, I have to type it out longhand. Sorry. So 828,088,000. 828,800. Yep, 88,000 plus 2,900 million. There we go. So we're at 3 billion, but let's remove that debt now. They have total debt 1.2 billion. So minus 1248. Okay. So, and their debt is increasing. That's not good. Debt is increasing. Cash is decreasing. Uh-oh. So now we're going to take this and divide it by the shares available of 42,050,000. So this has a share price of $58. It's currently trading at $59. So a little upside there. I am gonna have to. I think I'm gonna have to disregard this one, just because it's in a downward. Yeah, it's heading downward, and we don't know for how long. The last time it touched the 200 SMA has been a long time, so we're gonna dismiss this one, even though it's a really good contender. So good company, just too much downtrend for now. For this video, that would have been something I would have had in my catalog. Okay, CCU. I personally own this company in my M1 Finance Dividend portfolio. So same situation here. Let's add up sales, income, market cap, and then we'll remove debt, add cash, and then divide it by shares float. And that'll give us a good number of the price. Dividend is 2.54%. Wonderful. Okay, so let's do 277 billion. Plus 143.50 million. Yep. Plus 329 billion. Yep. Okay, so let's add cash and debt. Cash is... So this is in CLP, so we have to do CLP to USD. So we have to do cash of 389,303. That's billion. So this is million and then billion. So 1 Chilean peso doesn't even equal 1 US dollar. If we do 1 US dollar, that's 810 Chilean pesos. So having these numbers represented in billions is not scary or not out of the ordinary. I got a copy here, and let's paste. And we have to add 6 zeros. 1, 2, 3, 4, 5, 6. So now if I go backwards, 1, 2, 3, 1, 2, 3 millions, 1, 2, 3 billions, 1, 2, 3. Yep. Okay, so this is 389 billion showing correctly. And in cash USD, this is 1, 2, 3, 1, 2, 3, 480 million. 480, so plus 480, 324, 000. So that added some there, but now let's remove the debt, which is, they're showing debt as 1.3 trillion. So I've got to add 6 zeros here. 1, 2, 3, 4, 5, 6. Okay. So now we have 1, 2, 3, 1, 2, 3. So we're in the millions. 1, 2, 3 billions. So 1.7 billion in debt. So 17. So minus 170945576 3. Okay, so we're at about 4 bill right here. And then now if we go up to the shares float, we're going to take this and divide it by 63,300,000 or 660,000. So that gives us a share price around $78. And this is currently trading at $14. So this looks good. This is going to be a long-term one for me. And we can see we have a huge cup here and then a handle. However, this is a bear flag. And we are about to have a bearish turn here where the 20 is going to go under the 50 SMA. So I like this one a lot. I'm very biased because I own it, but I think I want to exclude it from... No, I don't want to exclude it. We're going to keep it, but we just want to know that it's going to go down because it might come back and touch the 200 SMA, which is healthy, which is around $12. So there could be a 10% down move. Patience on this one. So we're going to leave this one up. Let's look at the next 5 stocks. So I'm sorry, we only looked at the first 4. So we have Energizer, Equinix, Ethan Allen, Evercore, Haverty, and Lazy Boy. All right. Energizer hit a multiple top. I was shorting Energizer at one point, but got scared, so I sold at a loss. Okay, so these guys have a 3.6% dividend. Let's do the same thing where we add the market cap, sales, and income. So, and then the cash and debt. So we're gonna take 242 billion plus, no, minus the 242,500,000 million, 242,500,000. Yep. And then we're gonna add the 297 billion in sales. Yep. Now let's go add the cash and the debt. All right, cash, they have 200, are these USD? Yes, okay. So cash is 205 million. Let's go ahead and add that. Plus 205, 1, 2, 3, yep. And total debt is 3.5 billion. Wow, so minus 351800000. Yep. So now we're down to 1.8 billion, and we're going to divide this by 70. So divided by 70,077,707. That gives us a share price of $25. So this is actually lower. And this debt is scary. Total assets, 4.5 billion. Total liabilities, 4.4 billion. Oh, Energizer. They're done. That's why I was shorting them, but I got scared. They've got to be done, and their revenue's going down. Oh, they need a bailout or something. Let's look at the monthly chart. Yeah, this is going down. This has got to go to 25 and less. I would say like 15. So we're going to remove Energizer, unfortunately. Okay, now we are on Equinix, I believe. Ticker symbol EQIX. You guys can see my screen. Ooh, this looks like a juicy company. Okay, so again, we're going to do the same thing with market cap, income, sales. All positive. So 64 billion, 330 million. Yep, 64 billion. Yep, plus 704, 300,000. Yep. plus 7,260,000,000. Okay. Now let's add cash, remove debt. Ooh, they have 1.9 billion cash. This is US dollars. Saw a bunch of selling down there. Okay. Oh shit, I just removed everything. Let's put it back. Okay. Let's add 1,906,000,000. Yes, million. There we go. Now let's remove the debt, which is 15 billion. 15,057,000,000. Ouchie. Okay, now we're at 59 bills. It's not bad. And then we're going to divide that by 92 million. Divide by 92, 25 million. $641 stock. Did I mess something up? No. This stock is $681. So, geez Louise. Very expensive share price. It is a little overpriced. See how my math, this is a good example of why my math is at least on target a little bit, at least. Okay. Ugh, it's in a downtrend and it's being rejected by the 20. So I like this long-term wise, but I feel like it's got at least 50% more to go to touch the 200 SMA. So we're going to remove this one, unfortunately, as well. Not a bad looking stock though, honestly. Just not for today, not for today's video. Next is Ethan Allen. Looks very undervalued. So, and I'm saying that just based off of the forward PE and the PE right here, but let us be the judge. They have zero debt. So yeah. So let's do 697 million, 70. Everything is in millions. So I'm just going to shorthand everything because that's super easy. So 697.78 plus 114.3 plus 845. So that's 1.6 billion noise. And then we're going to divide that by 22.82. So a $72 stock price is reasonable. It's trading at 26. They have no debt. How freaking insane. Revenue's going up. Cost of revenue barely going up. Net income, great. Net income is growing. Ooh, I like this. I like this. I like this. I like this one. They pay a 4.76% dividend. How's their monthly chart? Ooh, it came down below the 200 SMA. Bounce, support, resistance, support. I like this one a lot, you guys. We're going to keep it. I think it'll probably come back and maybe touch the 20 and see if it's going to tank through it or if it's going to continue upward. Let's go on to Evercore. I do like this one. I'm going to keep it. I might add it to my M1 Finance, honestly. Okay, Evercore. No, they have some debt. We'll add it. Okay. Again, looking at the PE and the 4PE, this is undervalued. So we're gonna have to long hand this 74 billion. 474 billion plus 476.50 million. Yep, plus 278 billion. 2.78 billion. Okay. And then let's go remove the debt. I mean, they have good cash. Let's add that 663 million. Is this USD? Yes. Plus 663 point. Oh, it's longhand. 663.40. Yes. Okay. And let's remove the debt. Total debt of 371 million minus 371. 770. Okay. Total assets 3.6. Total liabilities 2.0. Looks good. That looks good. Okay, let's divide by 37,970,000. $218 stock price. This is $110. This is undervalued. My target calculation is more aggressive than what they have here. Was this ever in the 200s? No. Boom, 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 boom. I like this. We're gonna keep this, and there's good upside here. 218, so over 100%. So what I would do is I'm gonna keep this on my radar, and I'm gonna create a trend line from here going up this way, and then we'll probably see the stock hit around $100. So I'm gonna keep this one. Yep. And it's got a 2.6% dividend. Not bad. All right, next one is Haverty Furniture. Looks undervalued based off this data. So let's we're gonna have to do some longhand here because sales are in the billions. So we got 5. Oh, sorry, we're not gonna count the market cap because it's under $1 billion. Did I count the market cap? Nope. Okay, good. Ethan Allen, did I do you okay? Ooh, I included extra and Ethan Allen. Let me just rerun these numbers on Ethan Allen without the market cap. 114.3 plus 845. 959 divided by 22.82. So $42 stock. I was calculating 70 something. So, yeah. So Ethan Allen still good. Back to Haverty. We're not going to look at the market cap here. So we're going to do 89 million plus, well, 89.4 plus the 105 billion. No debt, so we're not going to go down there. And let's divide this by our 13,670,000. $76 share price is 31, so that's undervalued. No debt, profitable. Yeah, this is a good one. Let's look at the monthly chart. Yep, so we're going to wait on this one, but I think it's a good one to add to the watch list for sure. Let's look at Lazy Boy. All right, we do have over $1 billion market cap, so let's include it. 125 billion plus 173 million 80 plus 247 billion. Yep. No debt, so we're not even going to look there. So that divided by 42 million 71 million. 42 million 710,000. $91 share price at $28. Even if we remove the market cap of $12.50, that brings us to 78. Okay. $91 stock went to 78. Was it ever at $78 before? No, 45. So yep, this one also flirting with potentially coming down to the 200 SMA. We're gonna pass on this because it's got about it's about a $30 stock, and it's got to go down about 30%. So we're gonna remove this one from our watch list right now. And let's actually see what Haverty's got a long way to go down too, although I really like it. But it's got a ways to go, in my opinion. It could go down to the 25. I mean, we'll keep it actually, because it could go from 31 to 25 and test the 50 right here. 50 SMA. So we'll keep it. Ethan Allen, let's just take a peek. This one's been super solid. The lowest it can probably go is probably 22, where the 200 SMA is. So that's about a 10, 20, 20-ish% swing. So we're gonna keep this one. And we've already looked at these 3, so let's look at our next 5. All right. Here we go. Matthews International Corporation Conglomerate. Okay. So, not profitable. Just want to call that out. But let's do the math and then let's see what this company's about. It looks undervalued. So it is over $1 billion market cap. So we're going to add it. So we're going to do 1090. Yep. Plus the sales, which is actually, yep, 1.77 billion. We're going to remove the income of 76,030,300,000. Yep. Okay, and we're going to remove the debt too for posterity. Is this USD? Yes. Okay. Total assets 1.8 bill. Total liabilities 1.3. It's pretty close. Total debt 798 million. So let's do minus 798 million 57,000. Okay. So that brings us down a beat, and we can add the cash, sure, plus 69 million 20,000. Okay, and now let's go remove, or let's see how many shares. If we divide this by the shares, divided by 27 million, 430 million, 27 million, 430,000. $74 stock price, currently at 34. It's gotten to the 80s before, so not bad. Okay, let's look at what they do. So Matthews, it provides brand solution, memorialization products, and industrial technologies worldwide. It operates through 3 segments: memorialization, industrial, and SGK brand solutions. So this provides bronze and granite memorials, upright granite memorials and monuments, concrete burial vaults, cremation, memorialization products, granite benches, flower vases. So these type of companies are good in recessions. They're recession proof because people always die, unfortunately. The industrial technology segment designs, manufactures, services, distributes high-tech custom energy storage solutions, including fulfillment and identifying, tracking, picking, and conveying consumer and industrial products. This segment also provides engineered calendaring, laminating, and coding equipment, standalone marking products, laser inkjet systems, and spare parts, and calendar and coding roller refurbishing and retrofits. And then the last segment is brand management. What a weird conglomerate, right? You've got funeral service, you've got energy, and you've got marketing, branding. So they're not profitable. I don't know why. Let's look down here. They were profitable before, and then something happened in 2022. Something big happened. Operating income went negative. Something happened. Okay. Maybe they bought something. I don't know. So, and then it went down 50% trailing 12 months. So this might be a good opportunity to potentially buy this stock. It's 2.65% dividend. So what I would do is I'm going to draw a trend line from here, upwards here, and upwards here. Probably the stock is going to get to around $30-ish. Our calculation has it around 74. Are institutions buying this weakness? MATW. It says institutions own 93% here, and on FinViz, the older data, 78. So institutions are definitely taking advantage. Good to know. Okay, so we're going to keep this one. Good to know all that stuff. MSM. Okay, let's pull out the calculator. This looks intricate. So 4.67 billion in market cap. So we're going to add it plus 355 million flat plus sales 3.8 billion. And so all of these numbers, again, just as a heads up, are coming from the market cap, income, and sales. And now let's add the cash and the debt. So they only have 43 million in cash. 43 million, 54,000. Yep. And debt's probably going to be a little bit bigger. Total debt 700, so minus 794,590,000. 8 billion, so that's really, really good. And let's divide the 8 billion divided by 45 million, 706,000. $176 share price. That's huge. It's around $80 right now, so that's about a 50% discount. That's amazing. Target price is $90, so I've got these guys on a leg up here. I like this company, guys. I like this company. Are they still offering dividends? That's one thing I should have checked too. We can go back and check. Yep, so they're doing dividends, and it looks like they do dividends quarterly. Yep, they do quarterly right here. So very cool, very cool. We're gonna keep this one because I like this. And we're gonna move on to Nathan's Famous Restaurants. It looks like okay. This one looks like it's this is a low float stock, you guys. A low float dividend stock. Holy camboli. Oh my gosh. Good lord. Okay, so let's this is probably gonna be crazy. Okay, market cap is not over $1 billion, so we're not gonna include it. So let's do income of 18,500,000 plus 128 million in sales. All right, and let's add that cash and remove any debt. I'm thinking they have a lot of debt. They are a restaurant. Okay, so plus. They only have 50 million in cash. I thought they would add more. Plus 50 million, 60,000. Now the debt. Total debt, 108 million. Oof, 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 oof. Minus 108 million, 180,000. Ouchie, wowie. And now we're going to divide this by the shares available. So 279. That's 279. So a share price around $31. The stock is around 72. That's hecka overvalued. Yeah, this is pretty overvalued. Our institutions seeing that as well. Let's see. NATH. 53% ownership here, 42. So the institutions purchased more. Gosh, this is just overvalued to me. You know, there's better. I mean, I feel like this is going to keep going up because if we look at this pattern, you can see my mouse going up and then it took a dip and it's going to do a U and probably keep going up. Gosh, their debt. If I didn't take out their debt, which I normally don't. Liabilities are going down. Debt is also going down. Really good. Revenue going up. Cost of revenue going up. Gross profit going up. Net income growing really nicely. The director sold 2,000 shares. I mean, this company looks like they're heading in the right direction. Man, you guys, this one is overvalued, but I mean, it's solid. We're seeing some resistance right here. This is one I would want to check on March or April 1st, or I'm sorry, March 31st. Well, by the time you guys see this, it'll be past March. I want to check this one. I want to see how the monthly candle ended here. You know what I mean? Like, because this is a bearish candle right here with this long upper wick. And then we can see this candle going down. It probably might go back down to $60, which would be good. This dip right here would have been juicy. $39 dip up to $79. Wow. So this is one to keep on the list of the watch list. It is a little overvalued though, so just know that. Moving down to PotlatchDeltic. Deltic. All right, so it's saying it's currently undervalued, but in the future it's going to be overvalued. Interesting. 3.8% dividend. Let's this one is over the market cap threshold, so we're going to include it. 3 bill plus 333 mil, 900,000 plus 1.33 bill. All right, and let's go add the debt cash. Wow. It's a real estate company. Total cash is, so we're going to add it, plus 343,810,000. And we're going to minus the debt, which is 1,045,000,000. Okay. Total liabilities are increasing. I don't know. That's not good. Total, yeah. Debt is increasing as well. Not good. As rates continue to go up, these guys with jumbo loans or adjustable rate loans are going to get squeezed. So they might have actually a bearish chart, even though they might look okay. So now let's divide this by the 79,230,000. $59 stock price, share price. It's trading at 46. Look at this ascending triangle right here. My head's in the way, but where I'm circling resistance, 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 and it's falling. So that is bearish. Ooh, yep, this is a big bear flag. So you guys see this right here? All the way down here, this is the pole. This is the pole, and then this is the flag right here. This slanted rectangular thing is the flag. It's going to go down to 35. We're going to remove this one only. This would be a good dip buy one, but we're going to remove it for now because it's not for today's video, I guess. I don't know. PKE, I have not looked at this one yet. We have not looked at this one. Aerospace. Okay, this looks like a small cap dividend company. Weird. Are they still paying dividends? Quarterly dividend. Okay, so they pay every quarter. Nice. So I like this. I like that it's like a small cap dividend company, literally. And it's pretty consistent. Like if we look all the way over here in 2011, the stock, the low was $11 and now it's at $12. So it's pretty flat, which is good if you are investing in value in income stocks, because that means your share price is going to stay the same. So you don't have to worry about the volatile ups and downs, or the more so the downs, and you're still going to get paid the same amount. So let's do the math on this one. I want to see if it adds up. So the market cap is not over $1 billion. So we're not going to include it. So we're going to look at income of 8 million plus sales of 53 million. This should be around a penny stock. Goodness. 61 million. Look how much cash they have, though. What happened? 12 million. That's all the cash they had. I thought they had more. Plus 12,810,000. Total debt, 0. Okay. So total assets, 160 million. Total liabilities, 25 million. Great ratio there, but still. And then let's divide this by the 19 million shares available, 440,000. It's a low stock. And if we add the market cap of $2.66, which is basically take the market cap divided by 100 million. So 266 million divided by 100 million is $2.66. This stock is overpriced for sure. So we're going to remove this one. Although I liked it at first, but we got to be smart. So next up is the last 4. 1, 2, 3, 4. Tell me that you love me more. All right. Okay. Sturm, Ruger and Company, Aerospace and Defense, 5% dividend. I like that. So let's do the calcs. The market cap's basically at $1 billion, so we're just gonna count it. So 989.79. Everything's in the millions actually, so I'm gonna keep it. So 989.79 plus 88.3 plus 595.8. And we're going to just keep it there. They have little cash. Their quick ratio is 1.8. They have no debt, so we'll just stay here. Let's divide that by 17.24. $97 stock price. This is trading at 55. And there's a 5% dividend on it. I like that, you guys. I like that. Let's look at the chart. Decent. I mean, it's at 55, and the latest time that we could see that was at 55 was 2014. Now, if you ask yourself, has the company grown since 2014? Yes. So we're gonna keep this company. I like it. Very cool. Let's go to the next. Are they still paying a dividend? Let's just find out. Yep, upcoming dividend. Wow, they played us $5 special dividend. Very nice. We like this one. We're going to keep this. Okay, we got Southern Copper, 5.6% dividend. Very cool. I'm interested. You got me interested. So we're going to do 55 billion, 400 million plus income of 264 billion plus sales of 10 billion. 50 million. Yep, 10 billion, 50 million. All right, let's look at the cash and the debt here. I'm worried about the debt. Okay, cash, they have 2 billion. Very cool. So plus, they're growing their cash. Actually, they're losing cash. No. 2020, they had 2.1 bill. 2021, they had 3 bill. 2022, they have 2 bill. So a little all over the place. 2 bill, 069 mil. And the total assets 17.2 bill. Liabilities 9.1 bill. So that's a 2-to-1 almost, which is sick. That's so good. So minus the total debt of 6 bill 251 20 mil. 6 bill 251 mil. All right, 63 billion, and then we're going to divide this by, wow, this is going to be a huge, yeah, $749. But it's, if we look at the shares outstanding, I don't know why there's such a huge deficit of shares outstanding. Maybe it's reserved for the company. So let's take our 63 billion here and let's divide it by the 773 million, 100,000. $70 stock. Oh, I totally did something wrong there. I had something totally wrong. Let's pull this up. Let's go back here. This is the cash, 2 bill 69 mil. Yep. Okay, and let's remove the debt. So minus 6 bill 251 mil 200,000. Okay, and then let's divide this by 773,100,000. So we get an $82 stock price based on that. So I think both ways we are looking good. And this is a 5% dividend. Copper is bullish right now, I think. The chart should be bullish. Let's check it out. Oof. Man, it was just at 43 and went all the way up to 80. Wow. So volatile, but look at all this resistance right here. The stock price on the monthly has never closed above 70 million. So this would be a good one to watch. This is definitely worth having in the watch list for sure. So let's keep this one. Okay, next up we have Snap-on Incorporated. Definitely familiar with this one. Okay, so we got some big numbers to work with here. Let's chomp this down. 12 bill, 75 mil, plus 911,700,000, plus 4,840,000,000. All right, and let's add cash, remove debt. So we're going to add 757 million, 200,000, and we're going to remove, that's it, only 1.2 billion, 1204. USD, correct. Okay, and let's divide this by 52,024,000. Share price of 345. It's at 234. Not a 100%. If the stock went from 234 to double to 468, that would be a double. So we're at a decent range. My price target is not listed below. How are tools doing in this economy? I don't know. This is a nice little U-shaped pattern. Look at this. So many years of trading in this range and then finally breaks out. That's nice. Good for those who got in around $90. Wow. 2.7% dividend. I mean, this, if you had bought in 2012 and held, I mean, in 10 years, it would be at like almost a 500%. So, yeah, this one, look at this candle right here too. Very bearish. So, we'll put this one on the watch list, but we won't buy it yet. I mean, I won't buy it yet. I don't know if I'm going to buy any of these. I will buy the SCCO for sure. And just hold on to it because my dividend, my M1 portfolio dividend is long-term. So this is our last dividend stock that could move like a small growth company. So are they still paying a dividend? That is the question. Yes, they are. Is it quarterly? I want to say it's quarterly. So let's keep that in mind. It is quarterly, and let's go ahead and do the calcs here. 143,000 plus 289,500,000 plus 913 million sales, 600,000. Yep. They got a bunch of debt though. So they have, oh, that's not the cash. They have 164 million in cash. Plus 16482, 123. Yeah. Total debt 5 billion. They don't even have. Oh no. Yeah. Total debt is 5 billion. So minus 5,504. Is this US dollars? It is. This company is negatory. Total assets 7.6 billion. Total liabilities 5.6 billion. Ooh, this company is a red flag. They're profitable. They're a red flag, though. That's scary. They have so much debt. How are they going to pay off that? They're barely paying off that debt. Let's just go back and check. Total debt went from 4 billion to they took $1 billion in debt in a year. They don't even make $1 billion. That's nuts, man. Let's just look at the chart holistically just to see what we're looking at. So I would not buy this stock. It's up nicely from, gosh, $5 and went to $40. How nice. I would pass on this stock, honestly. So we reviewed 19 stocks, and at the end of the day, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 stocks made the cut. Some of these would be on a watch list, and some of them I would buy right now and hold for the long term. And we do have Nathan's, which is a little overvalued, but it's one of those that is just going to keep going up, it looks like, because it's Nathan's. So yeah, thank you guys if you made it this far. I appreciate you. Please consider subscribing. It would definitely help me out. Hit the like button. And yeah, have a good one. See you guys soon.